Hi everybody, it's time for the Market Minute on smallcapinvestor.com. I'm Jennifer Schonberger, and joining me as always is smallcapinvestor.com senior analyst Benson George. Benson, we had a slew of news out today, both positive and negative. LIBOR has been coming down. We see the FDIC come out and say, hey, we want to offer federal loan guarantees to stop these burgeoning foreclosures. We see unemployment claims rise above traditional recessionary levels. Goldman Sachs comes out and says, hey, we're cutting jobs. Amazon lowers its revenue guidance. I mean, the list goes on. Sony halves its outlook. How do we read these tea leaves?
Interesting question, Jennifer. It's a mixed bag, obviously, and a couple of things that you talked about with LIBOR coming down, and that suggests that there's a loosening in the credit markets, obviously, which is one of the things that we desperately needed in this market. It seemed like they were in a lockdown mode. Nobody was lending. Banks weren't lending to each other. Without lending, the wheels don't move, you know, and so that's certainly a positive. The FDIC, that's always a good thing, I think, at this point, because we're looking for some sort of stability. I think people need that at this point. Obviously, the other stuff that you mentioned, there's all negatives, to say the least. And that's kind of how the market played out today. You saw it go down significantly, but then you see it work its way up. You saw it work its way up. The Dow was actually up a little over 2%.
Is that a positive signal for everyone?
I think to some degree it is. I think it is, to some degree it is. I mean, the market could have just stopped. I mean, it could have continued in its slide, but instead people saw some positives, and so that optimism, I guess, is still there. People do want to believe in this market, and I think that's what we're seeing.
Fantastic, and we'll continue monitoring the market going forward. We'll see you back here tomorrow. Thanks.